Hello traders and welcome to a new video where I think that this video is really going to help a lot of you guys with deciding, is the trend going to continue or not? I get this question all the time and I'm going to do my absolute best to help. We talk about this a lot in the Discord, but one of the most important phases in any market is when it goes right above a high or right below a low. We're going to be focusing on when markets go right above a high. And the question really is, will the uptrend continue? So here's a bit of a cheat sheet that you can pause before we go on to a plethora of examples. So read a little bit of this and then let's go in. So first example that I want to show you is CHZ. Now on the bottom chart, you can see that is open interest aggregated on TradingView, and it is the perpetual market on the top candlestick. So what just happened? Well, what we can see is that price went above multiple highs and open interest rose a lot. What does that tell us and what does that mean? Well, what it tells us is that people are not closing their positions, they are increasing them. What does that mean? Well, that means that it's more likely than not that price will continue to rise because traders have not been stopped out or liquidated yet. Well, what ended up happening? You can see open interest on the bottom far right. This is what ended up happening. Price went from, it was about 13.4, 13.5 up to 16.2, 16.3 in a very short period of time. I think within 2 days, it had gone up that much. This happens all the time, and a good way to spot a very strong uptrend is to buy the breakout. And buying the breakout is a little bit tougher than just looking at open interest, but hopefully after looking through all of this, you will understand it enough to make good decisions. Let's go on to the next example. This is DIA. This is a recent example that I actually got to trade, and it was pretty good. So let's go take a look. If you look at the bottom right, we can see that price has gone up with a surge in open interest. Guys, open interest went from a flat about 4 million units, 4 million coins, to about 18 million. A lot of people are entering positions. Why is it that it's so important that we analyze the market when it goes above a high? Well, the reason for it, guys, is people are going to be stopped out and liquidated whenever price goes above a lot of highs into uncharted territory where it hasn't been before. Now, when this happens, if people are not liquidated, if people are not stopped out, then that can actually be a pretty good sign that price is going to continue to go higher. Case in point, Bitcoin at 69,000. Price is going to continue to go higher until all of the traders have been stopped out and liquidated. Markets are not your friend. Markets are here to basically take money from over-leveraged traders and hand them to more disciplined traders who have more money than, other people, than retail. And that's essentially what's going to happen in each of these examples. As you can see, a lot of people had entered, i.e. open interest was up a lot, and go take a look at what happened. The coin exploded higher. It really rose quite rapidly. This is a 1 hour chart, and within, I think, like 2 hours, it went from 0.9 to 1.24. A very, very, very wild uptrend. A good reason why this whole thing occurred was because people had not closed out their positions when price had gone above the high. What this is telling you is something actually quite ingenious, that people have not been liquidated yet. Because typically when price goes right above a high, that's where the action, starts, where people get liquidated. But if people aren't closing their positions when price goes above a high, this is what tends to happen. Let's go on. Reef USDT. This is a bit of a different example. First of all, it is on the 1 minute. But second of all, you're going to notice something very weird about the open interest in the bottom right. Now, before I show you the answer, what do you think about this trend? Are you bullish? Are you bearish? It looks like price is up there. It's at 27, kind of increasing. We're clearly in a local uptrend. What's going on with open interest, though? What's really happening? Here's what happened. Price went right down and would have stopped out every single breakout trader just about. This would have been a terrible trade for you to take. The coin ended up going a little bit higher and then petered off and collapsed. Very bad trade to take. A few reasons why. First of all, this is an uptrend accompanied by lack of open interest, falling open interest. That is not a good sign for you to enter, not healthy. Second of all, go take a look at the market reaction. When price went above the local high at 26, did it look like people were getting stopped out and liquidated, or did it look like there was more fuel? It looked like people were getting stopped out and liquidated. Open interest was falling, indicating people are being stopped out, they're being liquidated, they're closing, they're losing positions. If that open interest had surged and people were increasing or staying in their losing positions, then that would be another thing. But this was an example of something that you would not have wanted to enter. Now, this is big time USDT. This is another trade that I actually got to take and made some money on. So that might clue you in on a little bit of what happened here. This is the 5-minute time frame. Now, what I've isolated is price just went above the high. The previous high, guys, was about 144. 144.5 or something around there. Go look at the market reaction and go tell me what you see in the bottom right with open interest. For me, I just saw a surge in open interest, and I saw it that basically people were not being liquidated and stopped out yet. So I bought and it went well. We can actually go take a look at what the coin is at now, and then I'll flip back to Bitcoin. The coin's even higher, and that's really not that surprising that the coin is just continuing to go up. So why did this breakout work out so well and us longs made money? Well, we made money because we were able to see open interest the way, really interpret open interest for how it's meant to be used. Open interest is a good metric for have, the losing side of this trend lost yet, essentially. And if open interest keeps going up, it means that they're still in their positions. And if they're still in their positions, then price is probably going to keep going up until they're all dead. It's sad, but it's just how the way really these trends work. Let's go into the final example of UMA. This is a familiar one, 15-minute, but there's something very weird about this. And I wanted to cover this example because I want you to see just how vertical aggregated open interest was in the bottom right. Do you see just how vertically it just teleported higher? People were really increasing their positions here. Now, when open interest increases, that means that both a long and a short have created a position. However, when price goes up, those shorts begin to have pressure to have to exit. If they choose not to exit, well, then what tends to happen is that price will continue until it forces them to exit at higher prices. You can exploit this. This would have been a fantastic opportunity for you to have bought. Look at this. Price exploded higher within minutes. Price had gone up a ton. We were trading around a little bit above high at about 3.188. We went up to a high a little bit above 38, about 3.8. So whether this was, a news trade, a whale trade, it doesn't matter. What matters is the market dynamics and how people treat those news and, treat the price action essentially. And what this was basically indicating to you is that, guess what? People have not closed out their positions. So this would have been a fantastic trade for you to have taken. Okay. So I hope that this has shown you that you do not want to buy every single time that an altcoin breaks a new high. That is not a good idea. What you need to be able to tell, the most important thing, this whole presentation is about the market reaction. If there's a strong bullish reaction above price, that's great, but you need to look at open interest. If aggregated open interest is skyrocketing, that's a pretty good sign that price is going to keep going up. Because what is that indicating? Well, that is indicating that shorts and longs are increasing, and shorts are taking more risk on and not being liquidated and stopped out. If shorts are not being liquidated and stopped out, tell me, why is price just going to suddenly reward them and fall? No, a lot of the times markets trend toward pain. And if a lot of people are entering into a trend as it's going up, they're entering short, then this is what tends to happen. Price is going to go up, and then eventually, they're all going to get slaughtered essentially. I hope that this was helpful for really showing you the most important part of really any market phase. I would say is a breakout. And now hopefully you have the tools to be able to tell, will this breakout continue or will it just be a stop loss hunt? If you enjoyed what you learned today, click the link in the description below for more content like this. And happy trading.